Ladies and gentlemen, I'm honored to announce next fireside chat with IFX Payments, Innovation versus Regulation, who drives the future of the payments landscape. The session will be moderated by Will Marwick, CEO of IFX Payments. Will, the stage is yours.
Thank you very much. No prizes for guessing what we do at IFX Payments. As an FX and payments provider, we started out in 2005 before moving into the e-money space through the launch of our B2B payments platform, which is a virtual IBAN solution which allows businesses to manage their FX and cross-border payment flow. And so I'm joined here by our product director, Rosie McConnell, and we're here to unpick the question of who drives the future of payments. Is it the regulator? Is it all the new rules and guidelines that are coming out, or is it innovation? Rosie, I suppose you've got a pretty good idea of that.
Yes, I do. Yeah. Hi, everyone. I'm Rosie. Just a little bit about me. I've had 10 years in fintech across a number of different roles, operations, delivery, and product primarily. Innovation and regulation is something that I'm thinking about quite a lot. So we've got 40 minutes to talk about it, lots to get through. So I think definitely the answer for me is innovation, 100%. So I looked up the definition of innovation, and it's just a change in something that's established. So I think there's quite a lot that we can bracket under that term. But when I'm thinking about innovation, I'm talking about customer experiences, customer expectations for faster, more secure, cheaper payment methods and rails, and the technology that kind of provides that, and the platform that brings those customers to different markets and merchants. And of course, in innovation, I think there's the spirit of sort of competition. So that's something that's definitely upheld by regulatory bodies. But I think it's definitely innovation that leads the charge in the future of payments. I think regulation does play quite a big role, though.
Yes, I think I'll take the lead on regulation. I'll make this a little bit more interesting rather than just agreeing outright. Listen, I mean, the B2B market space, as you know, has grown massively over the last 3 years, and I think as players in that market, we've been benefactors of that for over that time. But it does create a number of challenges in terms of how we are expanding, and regulation really comes to the forefront of that. So, I'm not just talking about direct regulation. A lot of people here will be thinking about things like AML and CTF risk in terms of managing financial crime. But there's also, things like safeguarding that come into play. There is sort of your regulatory compliance matters, and then, the sort of, I suppose, the more indirect aspects of regulation as well, which is a sort of trickle-down effect from banks and other institutions, but also thinking about, consumer duty and wind-down plans, and really sort of trying to unpick the resource that drains within your organization, and being able to think about, well, how do I innovate fully within the confines of these new regulations that are coming into play. So really, it's about sort of asking the question, who do we want innovating, and actually how can regulation play a big part in driving that and making sure that the right players are, sort of building new products, new exciting payment, rails and methodology in a way that, is sort of upholds those principles.
Definitely, of course. We've got loads to talk about then. So I've got a couple of questions for you, Will. So to start things off, one of the challenges that we're experiencing as a scaling business is the cost of meeting local regulations and balances want to innovate for our clients as well. So what practical advice can we give to other companies like us who want to ensure compliance with diverse regulations without stifling an innovative drive?
Good question. I don't know if we're in a good place to give guidance, but I think when you're talking about payments, there's absolutely no doubt that you're going to touch multiple jurisdictions. Wherever you're regulated, wherever you're providing payments, the concept of cross-border payments is there as such that you just can't get away from those other regulations. So, first and foremost, when it comes to product development, I think if you can think about the idea that most regulations are sort of born out of the same principles around integrity, stability, putting the customer at the heart of everything that you're doing, then that means whatever you're building and whatever sort of you're putting out there is going to be sort of widely accepted by all those sort of regulatory stakeholders, whether that is the regulator per se, or whether it is banking partners, whether it's other institutions as well that want to collaborate with you. So if you can sort of keep that in mind, and then when you sort of enter new markets, you can start to think about what your localization looks like. It doesn't look like a complete product overhaul. You have a core central system that is compliant, and actually what you're thinking about is more local nuances around things like reporting and so on. So that's sort of one way in which you can kind of tackle it, but it's very sort of principle based. It's not particularly sexy, but the idea of investing in a really talented compliance team and legal team to help drive a better understanding within the organization of what what that spectrum of best in class looks like versus the must nots and the absolute do's. Understanding your own resources and your own risk framework along that spectrum is a way in which you can better understand which markets to enter and how you wish to enter them. When we got our EMI license, it was our platform was originally being built to service both the B2B and the B2C space, but you sort of look at servicing retail customers and you think there's absolutely no way we're geared up to do this. And you look at what the competitors are doing in the market, you look at there's some awesome platforms out there, and you just think we can't handle this. So actually, where is our specialty? What are we actually really good at, and what is our USP? And it's actually in the B2B space. So it's really thinking about applying that framework and actually understanding, right, if we're going to enter into that market, we know what our USP is. That's the way to go about doing it. And finally, it's not really about sort of circumventing regulations, but actually, if you're going to enter a new market, think about the exceptions that are available in that jurisdiction. It's not a means of trying to operate outside the confines, but those rules are there for an exception, for a reason, right? They allow you to enter the market in a way which is safe, it's secure for the for customers and for the stability and the integrity of that specific financial market. So, an example of that, again, is we've recently launched in Canada. We got our foreign money service business license. That does come with limitations, right? We can't service, in Quebec, for example, but it allows us to enter into that market in a way that is, that is manageable for us. It's reflective of our resource and our expertise. So those are the sort of things that I would be sort of suggesting that businesses do if they are going to be entering new markets.
Yeah, great. It's funny when you mentioned about that B2B, B2C, I remembered when we were having those conversations about resource allocation when we were back in the day of the sort of WeWork, and we were talking about how we kind of have to completely overhaul the team structure really to be able to serve consumers and businesses. And another thing that you kind of mentioned there, which was about the kind of operational aspect of managing the core and the modifications in local jurisdictions. So, that's something that we've kind of done in product by using a modular product design. So by reusing our core in all markets and then kind of tailoring the sort of outlying modules to make quick and easy changes to make them work in local jurisdictions, that's made it a much cheaper way for us to go to market in those jurisdictions. And it also allows us the kind of the opportunity to also tailor the product to the local markets as well. So we can offer a specific product for those clients there as well. So it's cheaper and faster to go to market, and it also allows us to focus our resources on innovation on the core product. And yeah, I also really loved what you said there about cross-functional teams. It's really important to have that kind of negotiation and that tension, I think, between people who want to innovate, people who want to come up with novel new ideas, and the people who need to kind of ground that in practicalities of regulation. Okay, so moving on, what about the difference in the relationships between innovation and regulation in payments across global markets? How do you see that affecting the future?
I suppose it depends if you see, that relationship as being a harmonious one or an adversarial one, really. I think, if you look at something like, the B2C trends that are transcending into the B2B space, right? So, specifically the concept of real-time payments. It's not just retail customers now that want to see their money move overseas, or even domestically, instantly. Businesses now start to expect that. So, you see the emergence of new players in the market who are looking at new technologies to be able to deliver that real-time settlement. So, the emergence of things like blockchain and other sort of technologies then where they're able to sell to some consumers who might forego something like, the security and the comfort of using traditional payment rails, but ultimately to the benefit of speed and convenience. Now, that's one way in which sort of innovations played sort of a really big role in our industry. But, regulators now are sort of fighting back. You've got the Council of the European Union and the European Parliament now last week have confirmed that they're going to mandate SEPA Instant. Now, well, what does that mean? That's moving euros within the Eurozone instantly, and that means settlement within 10 seconds, even if it's out of hours, so 24/7. And it's not just within your own country, it's throughout the entire Eurozone. So that's a mandated prescription now that regulators are now driving. It's not necessarily the FCA or anyone, or the EBA or anyone like that, but it's mandated instruction, which is going to shape the payment space. So what does that mean for the businesses who have developed their new technologies? Are they being punished for that? And what does that mean for businesses that are SEPA CT compliant but might not have the bandwidth to put in place instant? Should they be told, what's going to happen to them? Are they going to get kicked out of the SEPA scheme? What does that look like? So, there are sort of these questions that then you start to think about the opportunity cost. So, really for regulators, it's about, should they really be determining what the end goal is? Should they actually be sort of thinking about principles and be sort of guiding principles around how we should operate and leave, the emergence of those sort of technologies to sort of free market? Or if you become prescriptive, what that means is certain people have to drop out, other people have to allocate all their resource at the opportunity of doing something else, and they're things that the regulator really needs to start thinking about when they're sort of thinking about how we move the payments landscape forward. Because the alternative is if you create all these sort of binary rules and binary outcomes that people need to achieve, what happens is people start to innovate, outside of the regulated space, and more specifically the unregulated one, which is probably where we've seen the emergence of things like cryptocurrencies, right?
Yeah, exactly. Let's definitely come back to blockchain because I've got lots to ask you about that. But just kind of touching on what you said there about moving away from traditional methods. I mean, in the UK, we've got quite a robust regulatory framework. But I think if you look kind of further afield at African markets, they've seen really great technological advancements through the leapfrogging effect. So bypassing legacy systems and traditional payment rails and going straight to new technology like mobile. So that's created lots of different payment methods, all based on mobile, which is really fantastic. And then also away from Africa into the Asian markets, really kind of leading the charge on things like digital wallets. A really great payment method kind of cuts out all those third parties, cuts out intermediaries, and creates a closed loop between the consumer and merchant. So these different consumer trends in different markets and these different regulation frameworks in different markets, which have come from different lessons learned from their individual histories, I think that that's really great for us in the UK, as it means we can kind of pick and choose, we can take those lessons learned as well, and hopefully to kind of lead to a more progressive and innovative regulatory framework in the UK.
Yeah, it's kind of like the Apple approach of doing things second and better, right? And I think if there's an opportunity there for us as for our regulators in the UK market to take a similar approach. I mean, I think there's always a fear of over-regulation with anything. I mean, but I do think something like Brexit does sort of give us an opportunity to, I suppose, sort of loosen the noose, as it were, in terms of prescriptive rules without necessarily dropping standards. But I think really where a lot of the lessons learned for the regulator in terms of improving the way that the payments landscape develops is around more certainty within the regulation. Uncertainty creates a very difficult sort of arena for innovators to operate in, not really knowing what they're building is going to be allowed. And we've seen it with something like safeguarding as an example. That's the guidelines attributed to that are riddled with contradictions and omissions, which becomes problematic. I'm a big fan of open banking initiatives and everything else, but even when that came out, there was things like refunds were omitted from that guidelines, and lots of businesses saw opportunity within that, but clearly it was a gap in the regulation. And then we're even seeing it with things like MiCA. It's very unclear as to whether things like DeFi applied. The difference between utility tokens and investment tokens, all that sort of stuff creates ambiguity. And if we're not able to at least give some sort of direction for innovators, then regulators have this sort of indirect side effect on how the payments landscape develops, because actually what happens is you start taking iterative processes and have to change things because new refinements come out, and that's something that actually is just going to cause a lot of problems. So I think what I would say is that regulators do need to look further afield, and like you say, do look at the sort of emerging markets for ways in which they've been able to skip a lot of the sort of the problems or the challenges that we've had in the region, but also take learnings from that as well, and actually think about how we can improve that moving forward.
Yeah, I mean, I definitely think that complexity is a real challenge because the complexity leads to expense, right? And that can, I think, be a barrier to entry. So, I'm kind of concerned, I think, because, with all that complexity, it means you kind of have to offshore elements of these processes to other companies. And then you get other issues like vendor concentration risk. And I think actually the EU's come out with some new guidelines around that as well on the way to approach it. So you kind of need to choose your battles, I think, in the regulators. So, I mean, on that thread, how important is open dialogue with regulators for companies in the payment space?
It's important, but it's almost impossible, right? I think, and listen, it's not a regulator bashing sort of answer here, but you can't put all the onus on someone like the FCA, right? Or other regulators across Europe. If there's legislative direction that has to be followed, then they're equally bound to it as much as we are. So I suppose that's probably where my sort of biggest gripe on regulation comes from, is that sort of having to follow sort of a very rules-based and prescriptive process. But I suppose dialogue with the regulator, albeit it's like nigh on impossible, if you're able to sort of work with, have a membership within sort of associations like AFEP or someone like that, who's able to, you're able to give practical feedback to some of the challenges that you're facing. I mean, we had great success with things like safeguarding, being able to have that feedback loop in with the regulator to be able to solve a lot of those problems. That goes a long way in terms of improving things. But equally, the thing is with EMIs, right? If you look at the banks, if the banks have a problem, if there's a screw up, it's in the press. You all see it. Other banks get to learn from it. We get to learn what best practice looks like. We get to understand, they can sort of run out whole processes internally and solve all those problems. Challenge you got for an EMI doesn't exist, right? You don't really see examples of what's really bad practice, what's really good practice. And actually, what you're left with it's not a bad space to be in, but it's a very healthy environment of, collaboration and sharing and understanding of rules and obligations and things like that. But often, and we've seen it 1,000 times, there's a misinterpretation, and often, a lot of things are subjective, and they're, it's principle based. And so people might be a little bit more risk averse than others, and so you naturally sort of create this blend of what is a tolerance threshold, and actually understanding around what is good practice and what's not is sort of to be debated. Where that comes into the future of payments is that has to shape how you guys operate, and it shapes how the resource that has to be put into your team, but also pulled out of your team, because I've got to go and sort out ops and compliance and all that sort of stuff. So I suppose that's where sort of the indirect impact of not having that feedback loop starts to sort of appear.
Yeah. Yes, you touched on a little bit there, but I just wanted to ask you about the kind of the role that banks and other institutions play in shaping innovation and regulation. So we kind of talked about the regulators providing guiding principles, the banks being more of the enforcer of that.
Yeah, they're definitely an enforcer of that. I suppose the relationship with the bank really much depends on what you use the bank for, right? For us, it's about the payment rails, it's about the accounts. So we're an extension of their infrastructure. So naturally, they need to be, they are the custodians of that risk, and they need to manage that. And so we're held to account. And I think that's a really good place and a very healthy place to be as an EMI. And I think they definitely give you that litmus test around what's good practice and what's best practice, and things that you really shouldn't be doing. And so that's a really good piece of feedback, especially when you think about the industries that they're exposed to, the customers that they work with, and the expertise that they've got in-house. So that's a really healthy relationship. And to be honest, I suspect if there are EMIs and PSPs in this room, it'd be interesting to know what sort of feedback you get from your banking partners, because the one I see is actually a very sort of healthy collaborative one, which is about sort of which is principle based around sort of restoring customer trust in the financial system and the way in which we're processing payments. So it does that does lend itself to being a very beneficial process. Now, should it go beyond that? I don't think banks should be driving your innovation. I don't think that they should be encouraging you to be, they're going to be focused on the here and now. What are the rules? What are the regulations here? What are you doing? And does that fit? And does that fit within our risk appetite? And that's, that's fair enough. But really, I think where a good banking partner will be able to support you and help drive innovation is if they have the bandwidth or the appetite to understand what it is that you're building, why you're building it, and if they can see sort of tangible value in that. And actually, I think if you can pick the right banking partner, then I think you're destined for success. But it's not just banking partners that are going to sort of feed into that. You've got other institutions that we work with closely, whether it's providers or other payments institutions, but someone like Swift as well is someone is a business, an organisation that's really sort of driven change recently. The emergence of ISO and getting that already. I mean, obviously you've been whacked by that over the last few months, right?
Yeah, whacked. Yeah. Yeah. So I mean, ISO's I think a really great initiative. It's going to bring better interoperability, global standardization for messaging, and a unified framework, which I really think is really fantastic. We've had these boom in fintechs and different payment providers all coming up with their own language for how to talk about payments, which leads to sort of integration issues. And I think it's a really great initiative that's going to create some harmony in the network. And I think Swift has done quite a lot to talk about what the benefits are of ISO. We're using it as well as an opportunity to kind of review the whole payment stack and have a look at the customer journeys that we've got there and use it as a moment, not just to be compliant with this change, but also to ensure that we've got really well working sort of operational processes behind the scenes as well. And that's something that I think the banks are really talking about when they're talking about the ISO change. But Swift is also kind of treating it as an innovative moment as well, sort of a catalyst for innovation. With the access to all that extra data, what new services and products can we provide to our customers down the chain? So I mean, I think the innovation that is going to come from ISO is going to be game changing. I think that richer data is definitely going to lead to better outcomes for our customers, and there's also lots of low hanging fruit as well on AML and compliance too. So on the subject of data, what lessons from the payments landscape can we apply to the data economy, for example?
I suppose a lot of lessons. So I think if we look at data economy is this sort of big buzzword that we hear a lot about in multiple industries, right? And I think big data is going to be a game changer. It's going to help us predict, measure, govern sort of new products, new services, and it's going to be a way in which we can sort of really take the payments landscape forward. And that can be applied in others as well. But I think most importantly, it can not only help drive innovation, but it can also, more data, but it can also help drive sort of improved regulation. So if I think of innovation in the first sense, that whole idea about being able to track, customer data and being able to understand their behaviors, the payments that they're processing, what you're able to do there is put the customer first, personalize their products, and start thinking about new products that would benefit them, even if it means cannibalizing your own revenue, because actually they no longer need the FX trade that they're currently doing, or they no longer need to make those cross-border payments. They can actually do it in a different way. If you're able to actually suggest those new products to your customers, yes, your revenue might take a little dip on a single account, but actually what you're doing there is you're going to be reducing your customer churn in the long run. You're going to be building that brand trust and that confidence in your product and you as an organization that you're someone who's always looking out for them. So I suppose using that data there's a benefit there, and actually if we're able to leverage the power of that, I think it could be really useful. The other is that I think access to more data is really for the benefit of everyone. And I know we're not in open banking, that's not what we do, but I thought the open banking regime was a great example of that as a means of, and I think that's a win for the regulator in terms of driving, on my argument, yes, in terms of driving the future of payments. But what that was able to do was it opened up a whole new means of moving money for customers, which is ultimately to their benefit. It was account-to-account payments now reduces the chance of fraud and accounts and payments dropping out and all that sort of stuff. But also what it was able to do was it was to the huge benefit of EMIs and other sort of payments participants in this space, because by capturing more of that data without it all coming through sort of other sort of payment loops, we're able to get more data. We're able to then run our processes more efficiently internally, and we're able to have more fraud fraud prevention within the space. So, the more data we can use, it's only to the benefit of to the payments industry. And I think if those are lessons that can be passed on to other industries, it's how can you develop new regimes and new regulation that's to the benefit of everyone, rather than just us having to consistently provide services to our customers, but also think about ways in which we can holistically grow a whole industry.
Yeah. So we've got things like open banking, which is giving more access to data, kind of opening up the banks' sort of treasure trove of data they've got on their customers. We've got ISO, which is standardizing the way that data is stored. So it's all about data. So that kind of, I think, leads nicely onto my next question, which is, of course, about AI. How do you see AI shaping the future of payments?
I love AI. I think AI it's vast, it's endless, and I think the application is enormous. And I think my only advice to anyone is if you're not looking at AI, you really need to. I know there's been a bit of news recently about sort of various exits and whatnot, but there are. I think really in terms of its application, it can completely change the payments landscape in a truly innovative way. I think the definition you gave was sort of changing the established norm, basically.
Established, exactly.
Yeah, that's it. So that for me is changing the way in which we're moving money. And I think when I think about AI, it's not about I don't think it should be used for everything and anything, right? We need to we know it has its risks, it has its pitfalls. It's not a perfect solution, but what we're able to do here is understand what our own business models are, know what our resources are, know what our risk thresholds are, and really what our tolerance thresholds are for use within our own organizations, and to think about that application and where we can use it as a tool for scale. So I'm personally in favor of using it as an internal mechanism around becoming more operationally efficient. I'm a little bit nervous about using it on a customer-facing journey because, I think I need to get a better understanding of what that looks like. But, if I look at some of the things like PwC put out some data the other couple months ago, which said 80 to 90% of flags on transaction monitoring and customer KYC checks are false positives within EMIs. So if I think of the resource that's allocated to our financial crime team, that's thinking, right, well, that's a lot of resource being spent to clear things that are non-issues, right? That's just because the rules-based systems flagged them. AI is able to consume customer data, historical trading patterns, other payments data, and multiple other sources to basically clear all those false positives. Now, that removes the need to, as you scale, hire more people. That removes the need to, for human error, the risk of human error. And ultimately, it becomes a very powerful tool which is able to just churn through those flags 24/7. So if you have aspirations to bring on thousands of accounts a month, you're going to need a tool that's going to be able to do that. And actually, what it does do is it makes the work for your financial crime team a little bit more interesting, right? They're actually dealing with higher risk cases and actually interesting work. So that's a huge benefit to AI. The other thing is being able to sort of analyze behavioral trends on the platform. So, okay, I'm sure the sort of the product director in you is sort of saying, yeah, this allows us to personalize and do all these other wonderful things. But there's a lawyer from a past life inside of me, which is sort of looking at this going, there's new APP fraud rules coming in where we have to reimburse APP victims, within 10 days of any lost earnings. So that's, and quite rightly too, by the way, but that's, from a resource perspective, that means we've got to put a lot of policies, a lot of measures in place to be able to prevent that from happening, and to make sure that we're comfortable that that's not going to happen on our watch. So AI has been a tool being able to capture irregular payments, capture things that are a little bit suspicious, and being able to pull in from all those other pieces of information, I think is a very powerful tool. So I suppose to sort of go back to your original question is I do see it as being, something, a function that we should be leveraging. I do think by, managing those risks internally, we're able to put, policies in place. We're able to train our staff on it. We're able to create a culture that sort of understands the benefits, but also forgives the sort of shortcomings that comes with AI as well, whereas customers don't do that. So I think if being able to sort of harness the power of AI, I think is best placed within as an internal tool. But maybe you have a different opinion.
I do have a slightly different opinion, but I you can't deny the stats that we're seeing on fraud, right? I mean, I saw the other day APP fraud up 22% from 2022 in the same period. So, as a product director, I want more successful payments. I don't necessarily want more payments altogether. So, I think, the application there's definitely lots of low-hanging fruit for AI in the compliance space. And, I mean, if there's anyone who is incredibly innovative, it is those fraudsters. I would hire them if I could trust them.
I read this thing on for ChatGPT. They were able to completely copy as one specific bank, I won't name the bank, but their account opening forms and send that out to individuals, and you would have no way of being able to separate the difference. I mean, it's almost impossible. And like you say, there you go. Who drives the future of the payments landscape? Yeah. Fraudsters, maybe. Yeah, I mean, they are. I mean, they're kind of social engineering. They've got sort of degrees and majors in that, and getting people to make payments. So they're now having a tool like they can create content as well to back all that up. Yeah, it's pretty powerful. But I mean, the reason I am quite interested about this payment method personalization, I think, kind of starts with where I started in payments, which was one of my first projects. Really was. On the alternative payment method platform. So I was just churning through integrations, and we were trying to think about how to kind of filter the right payment method for the consumer. And I think we kind of got as far as a country level filter. So, if you think about that, you land on the shopping cart, you go to the payment page, you've got a list of all the payment methods that are available for that country, which is fine for the moment. But it's just not what if you fast forward 10 years, it's not what the user expects now. They really want a personalized approach. And they want to see what the payment methods that are specifically relevant to them for that payment. So, okay, well, I think we've got time now as well just for a question on blockchain. So I wanted to ask you the same question on blockchain. How do you see blockchain shaping the future of payments, particularly with regards to innovation and regulation? I've got to be quite careful here. I saw a lot of blockchain companies downstairs. So I think you use the definition of innovation that we talked about. I see blockchain more as revolution. AI is about sort of changing the way in which we're currently doing things, whereas blockchain is completely outside the parameters of what we've seen before. I know it's been around for a number of years now, but the whole concept about an open ledger, centralized or decentralized open ledger that allows sort of a peer-to-peer payment transfer, but I think, ironically, that's sort of born out of very libertarian principles, which were quite anti-establishment. And, the whole idea is that, there's sort of it's shared, and therefore, it's trustworthy, and therefore there's not the need for data, which is sort of a big polar opposite to what Swift are trying to do with ISO. So sort of goes to that forever conflict of, we want the personalized products, but we don't want to share the data, sort of that... retail customers are a tricky.
Tricky, yeah.
So I suppose from from a regulatory standpoint, I'm going to sort of try and take an angle here. Is I do see a big use case for it in terms of transaction monitoring and screening processes. So I'm really interested in the idea of zero knowledge proof and the concept that one FI can provide some sort of statement or key or code that confirms that there is truth behind what is being provided without the need to provide all that underlying data. So a transaction can go through, or a client can be onboarded without the need to provide sort of loads of documentation and cumbersome processes. So I do think the blockchain sort of application does have a uniqueness to it in that sense, in that we can kind of change the way in which we're sort of managing risk as organizations. And I think that then helps customers sort of feel more comfortable that they are not exposed to, cyber threats and, who actually does hold my data. I've no idea. GDPR was this huge thing back in 2018. I'm sure we've all had the odd customer who's sort of made a data access request and everything else. But the reality is that, things like, the Data Protection Act covered most of GDPR anyway in 2010. We've been living with it for so long. But, customers are more sensitive about their data now. They do want, privacy. They don't want everything scrutinized by, whole teams of, banking executives. So, there is an element of that which does stand true in where we're going. And I think there is a space for it. But I think it probably, we do just need to try and move it along, I suppose.
Yeah, great. Totally agree. I mean, we've had a few different flavors, haven't we, of blockchain to varying degrees of success, I think. ISO boom, white papers and websites and big promises. Decentralized finance, I think that's a really great theme. I think that's probably here to stay a little bit longer, particularly with the kind of consumer trends that we're seeing. NFTs, maybe not. Stable coins, they're making lots of moves in that this year. Something that I'm really interested in, though, is the smart contracts. Particularly applies, I think, to a product that we're working on at the moment in escrow services. So a different way to think about commercial agreements, different way to think about the operational processes that happen behind a payment. Really good with supply chain. So I think there's lots still there for us to get from blockchain. You want to say something more?
I agree, and I think the thing I was going to say was I think central bank digital currencies are a step in that direction. I think we know they exist. That whole concept exists between central bank and ledger movements and whatnot. So being able to integrate it on a customer level, I think, is definitely something that we should be looking to pursue. Especially if you talk about better access to financial services and that sort of thing, then they're the sort of innovations that we're going to be that are going to achieve that.
Yeah, and it comes back to, again, I think, to consumer expectations, which is the sense of trust being broken down a little bit. I mean, even with the story around FTX, right? That was a big blockchain sort of poster example of how these new products could serve us better. But unfortunately, we're still built off very similar frameworks where they're holding onto the funds weren't safeguarded properly. So I think we just need to kind of continue to take those themes away from blockchain and integrate them into our stack. So it's so fast, it's secure, it's cheap, it's accessible, and we can take that forward in the traditional payment rails that we're still working at the moment. Okay, so I think we're running out of time now. So Will, final thoughts. Have I convinced you that innovation is leading the future of payments, or are you still stuck with regulation? Stuck there.
Chosen. You've convinced me that innovation is where we need to be, but I still think there's a little bit of work still to be done. I think regulation still has a huge part to play in the future of the payment space. I would like to see sort of more free market factors and allowing businesses to be sort of a bit more masters of their own destiny. If, for example, SEPA instant adoption starts to pick up between all the banks and all the major players, then it creates a natural drive for others to have to follow suit, for example, rather than having to be mandated. So things like that is what I want to see more of. I want to see more output-based and more principle-based regulation rather than prescriptive rules, which will ultimately sort of support innovation. But you have definitely urged me more towards the innovation side. So you call that a success?
Yeah. Cool.
Perfect. Well, thank you. We've got about 2.5 minutes left if anyone has any questions that they'd like to ask. I think there's going to be a mic floating around.
You mentioned the 2010 data protection, and hopefully within a couple months we'll see the DPDI bill, the data protection digital information, with the upgraded GDPR and all that. What do you hope to see from that? I'm concerned that they're watering it down and not moving the needle far enough forward.
I suppose the thing is, if we separate it out between sort of consumer data and business data and actually think about more about the underlying customer, I'd like to think that it is more rigorous on protection and processing measures. I think there's still a case of the ICO are great in terms of if you self-report or if you but there's no investigatory process there and there's no meaningful feedback that comes out. I think if we're able to put in place more regulation around actually how we're processing, how we're storing data, how we're and sort of the length of time people are holding data and really understanding why. I think one of the things that was was a really big point that was made, but it hasn't really been focused on, is the sort of proportionality element of holding data and actually holding that's necessary for the services that you provide. And I think a lot of businesses still go above and beyond that. So I think more rigor around that, but ultimately with more rigor should come more access to more data to help you improve your systems. I think that's time, but thank you everyone for coming. If you want to have a chat afterwards, we'll be hanging around for a couple of minutes. Thanks.